Hey everyone, welcome back to Corporate Decoder, the place where we decode the complex world of business and finance. And let me tell you, this company, GCL Global Holdings Limited, has filed something that's a bit of a mixed bag with some really interesting numbers and a whole lot of risk factors to unpack. So buckle up because we're diving deep. Let's start with a quick overview. Before we jump into the numbers, this is GCL Global Holdings Limited. They're involved in developing, distributing, marketing, and publishing video games and other entertainment content. Their business is spread across Asia, Europe, the US and Latin America, and a huge chunk of their revenue comes from selling games and game codes. Now, this filing is actually an amendment to a previous one. They're filing this mostly to fix a small printer's error on page 114. This tells us the companies are pretty careful about their SEC filings, but also that sometimes tiny mistakes happen even in big corporate documents. The main story here is about the potential sale of up to 15,105,000 ordinary shares by existing shareholders. It's crucial to understand that GCL Global isn't selling any shares themselves. They won't get any money from this offering. The money goes to the shareholders who are selling. So who are these sellers? Well, we have ATW Interactive Ventures LLC, who can sell up to 14,480,000 shares that they get by converting some convertible notes they own. Then there's Teng Wu Boon, who can sell 625,000 shares. This sounds like a lot of shares, and the company itself warns that this could really shake up the stock price. Let's talk about the stock price as of early September 2025. Their ordinary shares were trading at $3.77. That's a number to keep in mind as we look at the figures. This is a really important point. They're registering these shares, so the selling shareholders can sell them, but it doesn't mean they will sell them or even that the company will create more shares. It's all about allowing existing owners to potentially sell what they have. Now let's get to the juicy part, the numbers and the business itself. GCL Group is all about video games and entertainment content. Asia, Europe, the US and Latin America are their markets. Look at this, a massive 86.8% of their revenue in 2025 came from selling games either on consoles like PlayStation and Xbox or through digital game codes. This tells us their core business is solid but also heavily reliant on game sales. They're also trying to bring Asian games to the world. That's a smart move, trying to tap into different markets. Remember those convertible notes ATW bought for nearly $3 million. This is where it gets interesting because these notes can be turned into shares. The company is pretty clear that ATW can convert these and potentially sell a lot of shares. While they're a Cayman Islands company, their main operations are in Singapore. This is common for companies wanting certain legal or tax advantages. Okay, now for the risk factors. This is where companies tell you everything that could go wrong, and GCL has quite a list. They say their business will suffer if they can't get hit game titles or sequels. That makes sense in the gaming world. They depend on getting the rights to sell games from other companies if they can't get those rights, or if the terms change, it hurts their money. The shift to digital is a double-edged sword. It's where the future is, but it also means more competition and having to change their strategies. They hand over a lot of control to retailers and online platforms like Steam or PlayStation Store. If those platforms change their rules or become less popular, GCL gets hit hard. This is a classic risk statement. They acknowledge they might not handle growth well, leading to big problems. Let's look at the numbers for this offering. Here's a key number. Ordinary shares issued before this offering, 126,943, 1,025. That's a lot of shares. And outstanding shares before this offering, 122,572. This tells us how many shares are actually floating around right now. They also mention ordinary shares issued after this offering, 142,000 on 42,000, 48,225. That's a significant increase if all the convertible notes are turned into shares. This is what we call dilution. It means existing shareholders own a smaller piece of the company. Remember, they aren't getting any money from these sales. So this offering isn't to fund the company, it's for the selling shareholders to cash out. This is a critical distinction. We've touched upon risks, but let's look at the financials specifically. They've shown their income statement for the years ending March 31st. Revenues in 2025 were $142,072.586. This is up significantly from $97,534.734. That's a nearly 46% jump. That sounds great, but let's see why. Most of that revenue jump came from console games, revenue up by over 35%. They sold way more game codes, meaning digital downloads. That's good, as digital sales usually have better profit margins, But game publishing revenue was a mixed bag. It jumped dramatically by over 367%. This was thanks to a new game called Black Myth Wukong. That one game really boosted their numbers, but before that publishing revenue had been falling, so it's a bit of a volatile area. Now look at the cost of revenues. It also went up significantly by 43.5%. This means that even though they sold more games, the cost to get those games out there also increased proportionally. This is why profit margins can be tight. So gross profit, the money left after direct costs, increased by almost 60%. This is healthy. The gross profit margin also improved slightly to 15% from 13.7%. This basically means for every dollar of sales, they kept a little more after paying for the games themselves. Here's another risk. The management team is new to running a public company that can lead to mistakes and governance issues. This is a big one. They found serious issues with their internal controls for how they handle financial reporting. This is a major red flag for investors. It means mistakes could be happening or harder to catch can. This section talks about how many shares could potentially be sold in the future by existing shareholders. And remember that big number of 15,100 and 5,000 shares could still flood the market. And they warn that this could cause the stock price to drop significantly. And here are the actual selling shareholders at TW Interactive Ventures LLC and Ronald Teng. The numbers show how many shares they own and how many they plan to sell or could sell. At W Interactive Ventures LLC is the primary seller. They can sell up to 14,480,000 shares, and they own a lot of the company at over 65% even before selling any. Ronald Teng is set to sell 625,000 shares. This is where they explain how these shares will be sold. They could go through underwriters' agents or sell directly in the market. It's all market driven. This section is mostly boilerplate, confirming that lawyers have reviewed the filings and that the company is incorporated in the Cayman Islands with most operations elsewhere. Here they name their auditors Markham Asia, CPAS, LLP, and Ernst & Young LLT. These are the folks who signed off on the financial statements. We should always check who audited the books. The auditors from Markham Asia CPAs LLC confirm that the financial statements present fairly in all material respects the company's financial position. This is standard auditor language, but remember that earlier they mentioned material weaknesses in internal controls. Let's dig into the actual numbers from the GCL Global Holdings Limited balance sheet. As of March 31, 2025, they had cash and cash equivalents of $18,247,380. This is good, but also up from $2,677,059 in 2024. Accounts receivable net is $25,761, $661, and $683. This is money owed to them from customers, and it's up significantly from 2024, indicating more sales or perhaps slower customer payments. Their total current assets are $62,092,981. That's up from $32,566,905 in 2024. They have more short-term assets, which is generally a good sign. However, their total liabilities are $64,630 and $321. That's higher than their current assets, meaning they have more debt than short-term assets. This is a trend to watch. Total liabilities and shareholders' equity is $167 and $668,359. Now for the footnotes, which contain a lot of fine print and detailed explanations. They made a big investment in a company called Netcom for $15 million, partly in cash and partly in shares. These shares are held in escrow, which is a way to ensure promises are kept. They also have a small investment in another company called CloudShelf. Their bank loans current are $10,585. That's a lot of short-term debt. They also have $1,421 in long-term bank loans. This section reveals they issued convertible notes worth over $33 million. These notes can turn into company stock, and that's a big deal for potential future dilution. Let's look at how their business is broken down. They have three main segments: console, game publishing, and advertising service. Looking at revenue by region, Singapore is their biggest market, contributing over $71 million in 2025. Hong Kong and China are also significant markets. This part of the filing is about Banleong Technologies Limited, which GCL acquired earlier in 2025. For Ban Leong in 2025, revenues were $193.6 million. That's a decrease from $208 million in 24. The company says this is due to softer market demand and tough price competition. Profitability dropped too, from $8 million to $4.95 million. They attribute this to lower sales volumes and increased promotional costs, and importantly, a one-time gain from an investment in convertible notes last year that didn't repeat this year. Their equity grew slightly, showing they are still profitable overall, but the drop in profit is a concern. They have over 22 million in trade receivables. They say they manage this risk well by checking customer credit. Ban Leong also deals with multiple currencies and they have ways to manage that risk so it doesn't hurt them too badly. Now for my take on GCL Global Holdings Limited. This company is in a really exciting and rapidly evolving industry video games. It's a tough market though. They've shown growth in revenue driven by game sales, and wisely they're expanding their digital offerings. However, there are serious flags here. The material weaknesses in internal controls are a big concern. Any investor needs to be aware of that. Risk factors about reliance on third-party publishers and platforms also highlight potential vulnerabilities, and the sheer number of shares that could be sold by existing shareholders poses a real threat to the stock price. The acquisition of Ban Leong adds a new business segment which could diversify revenue, but it also introduces integration challenges. And we see a revenue and profit dip there in the latest figures. Overall, GCL is trying to play in multiple arenas: game distribution, game publishing, technology, distribution, and marketing. It's a complex strategy, and the success of many parts depends on external factors like game popularity and platform performance. For investors, the key risks are market volatility, dilution from convertible notes, and the previously mentioned internal control issues. The company is clearly in a growth phase fueled by acquisitions and new offerings, but profitability and stability need to be proven consistently. What's your take on GCL Global Holdings Limited? Do you think they can navigate these risks and continue to grow, or are the red flags too big to ignore? Let me know your thoughts in the comments below. If you found this deep dive valuable, hit that like button and subscribe for more corporate breakdowns. Don't forget to join our Discord community linked in the description below to keep the conversation going. Thanks for watching, and we'll see you in the next episode of Corporate Ducko.